What's going on, everybody? It's November 2nd, 2022, the log episode 43. And today we're going to cover US 500 and the FOMC event and what took place today, what we were outlining before, and what we were expecting. Now, there's no trades placed today. We were just observing price, or at least myself. There's actually a few people who messaged me and took trades. That's just not personally in my rules. So my overall drawn liquidity today was 37.46. You can see here at 11:31 a.m. I said my drawn liquidity is 37.46. Keep my eye there. I don't believe we will see bullish PA. So we did see a good spike up in price, just a nice Judah swing, and then you just saw the collapse. And FOMC is usually like that, usually has like a part one and part two of the event. Part one setting up the Judah, part two is the actual move or displacement towards the drawn liquidity. So there's a few reasons why I was led to believe we're going to be bearish today. Because if you all know, if you've been following along, I was looking at this bullish order block at the time, thinking that we could use that to send price higher into the fair value gap. Now, looking at this prior to the FOMC event, I was looking at the other indexes and future contracts, and it didn't seem to me like we were going to be bullish today because of the SMT. NASDAQ failed to make that higher high along with US 500 and US 30. Looking at US 30, it didn't seem to me that we were going to continue higher. I think we've been on a very long bull run and we needed some type of retracement. So that was a good confirmation. Looking at NASDAQ, I didn't see a reason for it to trade higher. And then US 500, I was looking at that lower time frames thinking to myself, we could run lower today. And that's just basically how you're able to, switch biases. Like I said, there's times where I get the bias wrong, but then I'm able to switch gears and react pretty quickly. And I think that just really comes from experience and time on the charts. And if you weren't able to see that, that's perfectly okay. That's the reason why I try to at least outline the best to my abilities and help you see, from my point of view, what I'm seeing. So the context was yesterday we ran out buy stops. We displaced lower, had a market structure shift beneath the low there, and then we returned back into a premium. I'll show you in the 1 hour inside of this fair value gap. So in the 4 hour, we use this fair value gap. If you pay attention to the body, did not close anywhere near it. It's great to see. Your last up close candles are your bearish order block. So let me go down to a 1 hour. And this was a huge tipping hand to me, was the fact that we closed underneath this fair value gap here. Once we closed here in the morning session underneath it, I didn't see a reason for us to continue higher. There was no reason in my eyes for us to run higher, especially off the context that we ran out the buy side liquidity and displaced lower underneath that low there. So to me, it was tipping its hand that more than likely we're going to continue lower today. And then I was outlining the sell side liquidity resting at 47.46, which we just tapped on the open of today. So really cool to see. If we draw up our fib here, so coming off of the context of, right before FOMC, this is your dealing range. So price returns into a premium, uses a premium PD array, and then sends price lower. And what they're doing inside of that is taking out all of these buy stops here. So there's a bunch of buy side liquidity resting above the highs here. So they're running out buy stops. Anybody that's trying to, catch along or having buy stops above here is now taken on a ride and then ultimately stopped out. So that's the reason why I say to kind of stay out of these environments when you don't have as much experience. And even ICT myself, I didn't place any trades today. And that's for a particular reason. That's due to my rules. And I talked about it yesterday. There was a beautiful model that formed today, and I still didn't take a trade. Why? Because if you start making exceptions into your rules and into your discipline, that will lead to other flaws that will start happening in your trading. So I'm very strict on my rules. Some people can be a little bit more lucid in their rules and their discipline. By all means, we're all our own traders here, making our own decisions. So you can do what you wish, but from my experience, it's best to just stay out. I don't really care about missing this. I'm very happy this happened, because now the picture is a little bit more clear for me on which way we're going to start leaning towards in the next coming weeks. So I'm very happy this played out today. Let me dig into, I think, the 2-minute time frame. I actually did take some paper trades today, which the paper trading on TradingView is god awful. Like, if you see here, some of these trades I wasn't even really trying to click. I would place a trade and then it would stop me out really quickly, so I was very confused. But this is all paper trading. But we were down here and I was trying to long into this fair value gap, and then I sold short on this fair value gap here to go short, and then I had my take profit underneath the low there. So that was a pretty nice move. The volatility was wild. Like, if you were trading this live, the stop loss would have been pretty large. I think let me hop over to the futures contract because the price action is super clean there. So if you guys remember, we took out the buy stops and returned into that premium relative to the 1-hour time frame and that 1-hour fair value gap. So running out buy stops, we ran out buy stops once more, and then we had a nice displacement lower. Okay, that leaves a fair value gap, and right above it is your bear shorter block. So 2 nice confirmations if you use your dealing range. We're inside of a premium. So anything above equilibrium, it's valid to go short. So this is a beautiful model. And if this was in a high probability condition, so obviously not on FOMC, this would have been super valid for me to take. And you can start to see, you can even just put this away in your study log for, a model example. You want to see these nice displacements and all of these other things adding up as confluences, the 1-hour time frame, the 4-hour time frame, the premium, the fair value gap, nice displacement, buy stops taken. Like, this displacement is beautiful. I love seeing this. So definitely put that away in your study log. I know some of you took this, which is pretty crazy to me, but because even here at equilibrium of that fair value gap, I mean, my stop would be 28 points. It's a bit much for me, but to each his own. Overall, I think this thing dropped over 100 points or so. Yeah, 120 points. So if you caught that, congrats. And then we displaced once more, returned back into this fair value gap there, and that's the paper trade I went short on. I don't know why. Oh, it's on the US 500. So yeah, the sells are me take profit, and then I sold here once we reached into that fair value gap to take my profit underneath this low. So I think it was a really nice trade. I just haven't placed a trade in about a week or so, so I wanted to kind of practice a little bit on paper trading. We use the bear shorter block, the tail end of it here, these last 2 up close candles. 45-minute gives a nice little view there. And then we drove into the sell side liquidity resting there. So very, very cool to see play out. As far as the rest of the week goes, like I said, it's still uncertain, but I think we have a little bit more clear view now of what price wants to do, or at least reach for. I think the weekly time frame will really tell the story by the end of the week. We drove up into the bear shorter block. If you look at the wick, drove up into it, premium relative from dealing range high to dealing range low. So I think if we continue lower, if we take out the previous week low, we can continue lower, maybe in the sell side liquidity at 34.91. So that'd kind of be my overall draw on liquidity if we really start getting some nice displacements. would be really cool to see is if tomorrow we don't have a super volatile day and then we leave a bearish fair value gap. Let's just say resting here. And then Friday we draw up into it and then we drop lower. That would be amazing. But I'm officially not bullish on this by any means. We could go into consolidation, but I don't really see that happening, to be honest. These are my sell side liquidity targets. So you can put that on your charts as well. I did mention, I don't want to go on too much as a tangent, but I put in the Telegram today. I said out of curiosity, is there any other mentors in the ICT space that you personally have witnessed that calls the markets? And I'm not trying to say that, I'm the best and I'm calling the markets to a T every single day. But if you have noticed over the past 2 months now, I rarely get the market wrong. And it's interesting to see a lot of these mentors and gurus on Twitter that claim they know these concepts, that claim that they're the best, that claim, their signals are the best, but yet I don't see any of their students talking about them. I don't see anybody talking about these so-called market calls. And I know there's a few. I respect a handful of people on Twitter that have been around for a long time, especially charter members. And I'm not just saying that from, a charter member standpoint, but I believe us charter members have been groomed by ICT. If you seriously took the work serious, there's no reason that, you shouldn't be at least at a very high level. So drop your comments below. I definitely appreciate it. I said in here, I rarely ever promote my Telegram, my YouTube, my Twitter. I barely ever tweet on Twitter because I don't really care about money from people. Like, I'm not here to sell you anything. I don't care about your money. I don't care about mentorship fees. I'm not here and building this whole thing up just to sell you some bullshit, signals package. I think all of that is bullshit. I've been around this industry for 5 years now. I've been scammed by plenty of people so many different times. It's very annoying. And I want to be transparent. I want other people to look at me and take it as inspiration and do the same as I'm doing, put out free content, help people for free, and trade for a living. I'm in here to make money from trading. I'm not here to make money off of mentorship fees and make money off of scamming people. That's not why I'm here. Okay, so I definitely appreciate all you. And until tomorrow, good luck and good trading, everybody.